Welcome to today's video on technical stock market investing for beginners. Now, this is a huge little title, slur of words that don't really mean much to the average beginner. So let me break it down a bit. Technical stock market investing means that you're investing in the stock market using a technical approach, and how that can actually increase your rate of return from the average 7% that the S&P 500 offers as a buy and hold approach. Alright guys, if you've never been to my channel, I am the Impeccable Investor, and I am teaching people how to invest, how to day trade, and how to do everything in the stock market. So if you want more content like this over day trading, over investing, please hit that subscribe button and turn on those alerts so you get notified every single time a new video comes out. And moving on. So if you can see here, technical investing is when we look more at the charts and not necessarily fundamentals. We know that a company is good when it's been around a while. So you know that you can be investing in a good company when you're investing in a stock known as a Dividend King. A Dividend King is a stock that has been offering dividends for 50 years or more. But not only that, they've been increasing their dividend every single year for 50 years or more. So Johnson & Johnson is one of those stocks. It is a Dividend King. It is on the run. It is always long-term uptrending. It has great dividend to offer and increasing its dividend every single year. So that's something good to watch out for. So if we're looking at this short time period that we are looking at here on this chart, from it looks like about, I guess I don't have the years up, but 17, 16, 15. So from the beginning of 2015 to currently, it seems like you would have had a 26% return. So a 26% return over about four years gives you, I'm not really that good at math, but I'm going to say around a 7% return. So I guess a 6% return, 6.2% return. Again, sorry, not the math whiz, but we're looking at that amount of return each year. So you're looking at a 6% return each year, which is great because you also get to factor in the dividends that you receive from it. So that is actually really good to see. However, if we take a technical stock market investing approach, which is what I'm advocating for in this video, we can actually see how we can increase that profit here. So if you can see, this simple line here is the 200-day simple moving average. What this line does is it basically shows us, in my opinion, where the stock is going. When it's above this line, the stock tends to be bullish, which means it tends to go up. When the stock is below this line, it tends to be bearish and tends to drop more. So how are we going to use this thesis to help us invest? Well, how about we only buy shares when it's above the 200-day moving average, right? We can even set a stop loss on it. So if you see here, trading starting in 2015, you would actually not have your money in this stock until around this point when it crossed above it. Now, what are you going to do with your money while it's not in the stock market? Easy. If you like day trading and key requirement, you're good at it, then go for it. But what most investors should do is just open up a money market account or find another stock that's trending up. So in a money market account, it's like a savings account where you can basically just hold your money there and accrue some interest on it, make a small amount of interest while you wait for the stock to go up, or you find another great company that is also above the 200-day moving average and you move with that. So you can see here, so you basically would have been out of the position here. So when you got into this position, you would have gotten in here, you would have made about 4.2%, no, 0.42%. So again, you don't make much, but then you start to cross here and then you go up, and now we're at 14%. All right, so you just made 14% plus the 0.42. So let's just round up to 15% so far. You get out of the market here, you get back in, you get back out, whatever. Then you get in here. The next spot you get out here is another 14%. So the 14% plus that 15% we just had, we're already at a 29% gain so far. And now we're out of the market. And now remember, each time we're out of the market, we're most likely going to have our money in a money market account or in a different stock. So we will be making a small amount of money on that, but we're not going to factor that into this. But if you can see here, if we cross above this line and we trade it up to here, you got at least a 0.72%, if not break even. Then you got up to here where we're currently at, you made about 4%. So now we're looking at around a 35% growth here. So what does that mean? That means we just bumped it up. We just bumped our return up by 9%. So if you're investing with $10,000, you just bumped it up by $900. But again, what else can you do with this? That means you're also putting your money in a market account. Sorry, I apologize. And then you can also put it into stocks that are also uptrending, right? That are also putting in some progress. Something else you can do is even short below this line, but that's going to be a more riskier approach. So let's even break down some stocks. So if we want to break down Coca-Cola here, if I can get in KO, you can see here that it's pretty much range bound this whole time. So if you take the period between 2016 and 2018, so on 16 we started here, and on 18 we ended, let's say about here, that's a 12% increase over those 2 years. So if we would have invested above this line here, we would have got up to 7%, then up to 12%. So now we're at 19%. So that 19% versus that 14%, you increased it by 5%. So this is just one way that you can beat the market by using a technical stock market investing approach. Again, guys, if you really like the content, please hit that thumbs up button. Please hit the subscribe. We'll have more content to come. And for those who stay to the final end, I just wanted to let you know that yes, I will start investing in some video software, some editing software, and make these videos truly popping and not just me in front of this blank screen. All right, guys, thank you so much. See you tomorrow for our top stocks to watch out for.